Ladies and gentlemen, how you doing? You're welcome to this presentation call on premium trading with Professor John Essy. But unfortunately, he can't be here due to circumstances beyond his control. And that's why we are taking it upon ourselves to learn much more from the app called Learn Crypto Trading. So right about now, I'm sharing my screen on bullish patterns. And this is Morningstar. So Morningstar forms following a downtrend, meaning that the prices should be making lower lows and there should be selling pressure exerted by the sellers. The pattern indicates the start of an upward climb. It signals a reverse in the price trend. After a morning star appears, you should look for a confirmation that a reversal is indeed occurring. A confirmation is the second candle, and it should be green. What the pattern looks like, the morning star pattern is made out of three candles. The tall red candle with a big real body, a smaller red candle or a green candle with a short real body and long wicks, and a third green candle with a big real body. I hope we know what is body and wicks in a candle. Pattern psychology. The middle candle of a morning star, in bracket, the one with the short real body, captures a moment of indecision in the market, where the sellers begin to give the buyers the control. And then remember, the third candle, which is the long real candle, confirms, that's the confirmation candle, confirms the reversal and can mark a new start of an uptrend. So this is what a morning star looks like. It is created from a formation of three candles: the red, a small green, and then a big green. So a first candle made out of a long bearish candle. The second candle is made out of a short bearish or bullish candle with long wicks. So you see this second candle can actually be a red or green candle. And then a third candle made out of a long bullish candle. That is the formation of it. So see an example of a morning star in a graph. You can see where it's cycled there. A red candle was formed. You saw a smaller red candle with a short body. Remember, the middle candle or the second candle could be red or green. And then a third candle which signaled the formation. And you can see that the confirmation candle afterwards, you saw what or how the graph went. It went bullish, some percentages of increase. So that is all about the morning star candle. We now go to three white soldiers. The three white soldiers pattern. Bullish pattern. Three white soldiers are a bullish pattern that can be found in a downtrend, meaning lower lows and high selling pressure. The pattern is used to predict the reversal of the market direction. Three white soldiers are considered a reliable reversal pattern when confirmed by other technical indicators like RSI. So what does the pattern look like? The three white candles pattern is made out of three consecutive green candles with long real bodies, and each candlestick opening within the previous candle's real body and a close that exceeds the previous candle's high. These candles shouldn't have very long wicks. So these are telling you the characteristics of the three white soldiers. You can see right there. The three white soldiers pattern suggests a strong change in market sentiments. When a candle is closing with small wicks, it suggests that the buyers managed to keep the price at the top of the range of the session. Right. So we can see in this graph under, after the formation of the three white soldiers, what happened afterwards? The prices went up. Are we following? Please, if you are following, just give me number one. If you're tired already, give me number two. It's getting interesting. We'll soon be done with this, then we'll jump into the test. Oh, yes, I'm happy to see that. Sheung, you're following. Thank you, Emmanuel John, Ibrahim Osman. John, good to see you. Oladele, Temitokbe, Carol, Steph. Thank you, thank you. Marke Olele, you come today. Kindness, man. All right, that's good, that's good, that's good. We'll make progress, we'll move. Yes, so we have already checked 42% of the bullish candlestick patterns. You see how it's easy to read and learn, mostly when you are doing it with people. We'll go again. Now we're going to be checking on bullish engulfing. Bullish engulfing. Remember how I taught you, when word look big, break it down small, small. Bullish. Market, they go up. Engulfing. Engulf. The N and the gulf. They gather. They spread everywhere. So let's go. Bullish engulfing. A bullish engulfing pattern is a candlestick pattern that forms when a small red candlestick is followed the next day by a large green candlestick, the body of which completely overlaps or engulfs. You see, now where the engulf comes from? The second candle must completely overlap or engulf the body of the previous day's candle. What does the pattern look like? The bullish engulfing can be identified when a small red candlestick showing a bearish trend is followed the next day by a large green candlestick showing a bullish trend, the body of which completely overlaps or engulfs the body of the previous day's candlestick. Please, you all got to understand, they're using the word day here. That's day time frame. That means that you'll be checking on this pattern on longer time frames. Pattern psychology. Sudden buying interest drives the price to close higher than the previous day's opening, forming a green candle. This indicates that the bulls attempt to restrict the price from falling further and thereby reversing the trend was successful. You see, Anna, this is how it works. So let's say this candle was formed the previous day, the red candle. And then the next day, this bullish engulfing candle was formed. That shows that the market has reversed to become bullish. So let's see how it shows in a graph. Awesome. So you can see on this graph here how, I think it's on a daily graph. Oh, it's showing, okay. You can see that after the red candle was formed, the other candle that formed the next day covered and engulfed totally the red candle. And afterwards, you saw that the market went up. The market became bullish. Sheun Aribasu, I need the Learning Crypto Trading app download link. There's no download link, Mr. Sheun. Go to your app store or your phone store or whatever store you have on your phone. Type Learn Crypto Trading. Download the app that you see there and learn. Yeah, so that's about the bullish engulfing pattern. So we'll go next. We're already 57%. To show you how easy it is to read and learn. We'll go next to bullish three-line strike. Bullish three-line strike. The bullish three-line strike is one of the most popular and effective trading strategies in the world. The bullish three-line strike is a four candlestick pattern that indicates a bullish reversal in the near future. What does the pattern look like? A bullish three-line strike consists of four candles. Of these, the first three are bullish. while the last is bearish. Here follows the exact definition. The first three bars are bullish and close higher. The fourth candle is negative and closes below the low of the pattern. The general interpretation is that a bullish three-line strike marks a pullback in a bullish trend, which soon turns up again. So irrespective of the fact that the fourth candle may be a red candle, that three big candles, green candles, showing you that even though the market has or is experiencing a pullback, it will soon begin to move up again. So what's the pattern psychology? Coming from a bullish trend, market sentiment is mostly bullish. In other words, most market participants believe in ascending prices. As a result, the market forms the first three bullish candles. However, with the market having gone up for quite a long time, it's becoming overbought. You hear that English? I'm going to type it here because it's something that can help you. So you can know when a coin is overbought or oversold. We're going to come back to that, yeah? I just wrote it there so we know. However, with the market having gone up for quite a long time, it becomes overbought. That is, the market simply has gone up so much that more people are starting to look to sell off some of their positions in anticipation of a pullback. In other words, market sentiment is starting to become more bearish. So let's say you go on a trade. Let's say you're trading on Troy, for example, and then it continuously goes up, continues from 20 to 30 to 40 to 50 to 60 to 70. At a point, how do you know that that trade or that Troy is overbought? Can anybody give me an example? How do you know that a trade is overbought? How do you know that a trade is overbought? Let me go to my Baba. Can you see my screen? That's the power of ChatGPT 4.0. Right, let you finish writing, then we're going to jump through it. Right, so an asset is considered overbought when its price have risen too much or too quickly, indicating a potential upcoming price correction or reversal. Here are some common methods to identify overbought conditions. The use of RSI indicator. That's one of it. The second one is the use of the moving average convergence divergence, MACD. The third is the use of stochastic oscillator. And the fourth, the use of Bollinger Band. So let's focus on the Bollinger Band because that's something we are much more acquainted with, because one of the indicators we use for our top gainer strategy. So Bollinger Bands are volatility bands placed above and below a moving average. When the price consistently hits or crosses the upper band, it suggests an overbought condition, as prices are rising rapidly within a short time. Let me hit the point again so you get it. When the price consistently hits or crosses the upper band, it suggests an overbought condition, as prices have risen rapidly within a short time frame. So let's do something now. I'm going to go to my Royal Q. I'm going to check for the top gainer coins. You know, you can check it up from the front page of your screen. Where change is written. If I click on change, it will show me those coins that are losing and those coins that are increasing in value. So let's see, SCRUSDT is at 22% already. Let's analyze that trade. I'm going to click on it now. So you see, even on a 1 week, that shows that this coin is a new coin. It's not even up to 5 weeks in the market. I'll go to 1 day. This is the formation on a 1 day. I'll go to 4 hours. So I want to put on the Bollinger Band. Let me know if this trade is overbought. So I'll know whether to still put money there or not. I'm going to click on Bollinger. Right. This one is 4 hours. And we are told that once the price value has consistently hit the higher Bollinger Band, it shows that the trade is over what? Overbought. Moving average is being shown here. Most people don't look at these indicators. I moved from just moving average. Now I clicked on technical indicators and just show me stochastic, RSI, and everything. Remember that when we checked on this just now, they spoke of stochastic oscillator, RSI. So if this thing was overbought, it wouldn't be on neutral. It should have been on sell. It's only the MACD that's showing sell. But I can see on the technical indicators here, they are showing me neutral. If I go to moving average, you see that there are more buys than sell. That's to show you that there's still propensity for this trade to go up. So if I were you and I have some money, I'm gonna put some money on this trade right now. So let me do that. This is SCR. I'm gonna create a trade right now. Go to Martingale, come to create, come to trade strategy, manually create, choose the strategy setting. I'm gonna choose my strategy, TAJ strategy. You don't have my own strategy now. I'll click on it. I'm gonna change this figure to 43. Everything has changed to my strategy setting. So my strategy setting basically is on cycle and I go for 1%. So as soon as it closes, it automatically opens another trade for me in the same coin. So I'll click on show, come to activate, and I click on create. So I have created this trade right now. So let me show you why I created this strategy during this bull run. Let me go home now. So you see that today I made $10.27. I'll show you how I made it. Just from one coin called Troy. And imagine that I don't have this Troy on cycle. I would have just made just 1 cent. But because it's one of those coins that are going to increase in value, let me tell you something about Troy. Troy is an exchange coin. Just the way you have BNB, Binance Coin. That's how you have Troy for Troy Exchange, which is an exchange, a cryptocurrency exchange. So I put it on cycle because after my research on it, I saw that it's going to increase so much in value. How we know how to research a coin to know if there's going to be value in it long term or if it has outlived its usefulness. How we know how to do that with CoinGecko. So you can see Troy. That's why it's good to have a coin on cycle. So with this one, Troy, like this now, I see hold it too because there's still a lot of sugar in it. It's just minus 6% right now, which is the second on my trade. I'm going to click on it so that I analyze it a bit for you to see. For those of us who know those candlestick patterns that Prof has taught us, you can see a 4 hour candle and something is being formed here. A flag is being formed here. The pole is formed already. What remains is to see the candle that's going to break that flag. I don't need to use trend line to do it. By looking at it, I already see what's going on. And I see that this thing is still going to increase. Because once that red candle on there pushes forward, upwards, it's going to form as much as this pole, the length of this pole as take profit. I guess a lot of us know what I'm trying to say because I'm analyzing it using candlestick bullish pattern. That's on the 4 hours. On the 15 minutes, it shows me that this thing is increasing. It's coming up already. Let me put on the KDJ indicator. The KDJ indicator has shown me that it's still going to increase. So if you all don't know, look at this Troy. It's still going to go up today. So that's a good trade to have. That's why I have Troy on cycle, as you can see. So you see the SCR just now, say the good profit. So let me show you how I take profit quick. I click on the body, click on sell, come to market price, click on 100% and click on show. That trade has closed. I come to trade settings, scroll down, click on save again, sure, and I reopen the trade, create, and I hit it. That trade has been reopened again because I can see the pause. If I go back, I can see that it's at minus 0.10%. But guess what? I don't scrape something already. Sure, you see that the $43 I put in, I've made some 26 cents. How do I know that? I'll come home, go to revenue details, and ta-la! You can see some profits have been made. That is what we call scraping or scalping. I can't come on a trade and see my trade at 0.8% or 80%, and I'm not going to close it first. I believe in a bird in hand is worth 300 in the bush. I hope you understand what I mean. And also, I don't know your question. Anyway, so I hope we'll be able to understand this. Wait, make I go shop this thing again first. They play with me. Are you joking? So you can see it live. I will scrape. When you come here, when you look up, the profit don't increase. You see, it's SCRO 2 times back to back. So imagine I had $400 using to do the scraping just now. I would have made some like $3.90 something cent already. That's just how it works basically. You don't need to wait to see your trades close. Well, every trader has his own different patterns. So yeah, that's something you will learn over time as a trader. Yes. So okay, should we continue with our training? If you want us to continue, just type 1. If you want us to close, type 2. The first 10 people will continue with that bullish reversal patterns will finish and take the test. Okay, Zio say 1. Grace Gold 1. That's nice. Okay. Michael. Carol. Fine country. Okay, that's fine. I'm going to share my screen again and we continue what we were doing in the first place. Right. So we came back here because we went out here because we're trying to explain overbought and oversold. That's why I had to go to ChatGPT to break it down. How do you know if a coin is oversold? And using that technology, we went back to a trade SCRO and tested it to see that, well, it's not oversold from MACD, from the oscillator, also from Bollinger Band, and that's why I placed the trade with $43. And right before your very eyes, I started making profits on that trade already. So listen, these things are just common sense. Somebody would ask me, how do I place a trade? Come on now. Come on now. How do you place a trade? Want me to go click on create, go marketing strategy, click on trade settings, put your this in. You already know this. Mr. Gidigbe, I'll take a question after the class. Let me finish this thing. You can write it down. You can write your question on the chat box. You don't need to raise your hand. Please write it on the chat box. Thank you. So let's continue here. Yeah. However, with the market having gone up for quite a long time, it's becoming overbought. That is, the market has gone up so much that more people are starting to look to sell off some of their positions in anticipation of a pullback. In other words, market sentiment is starting to become more bearish. As the next candle opens, you see how buyers push the market downwards in one long candle. And while the move was sudden and violent, most market participants still are bullish given the rising trend. As a result, the price continues to head higher shortly thereafter. So this is what we see, or what we know as the bullish three-line strike. One characteristic you can see here is the three green candles are kind of looking like brothers and sisters, like twins. But the fourth candle, which is the red candle, is bigger, longer, and covers the entire body of the last three candles. That is the bullish three-line candlestick. So we can see the formation on here when the bullish three lines showed up, and then you saw the fourth one, which is the red candle, and then afterwards there was still an increase in price, an increase in value. Right, so the next candlestick pattern we're going to look at is three inside up before we do the bullish pattern test. Three inside up, three inside down, Abby. Pattern type bearish. Three inside up, three inside down. Okay. Right, the three inside down is a bearish candlestick pattern. The three inside down candlestick pattern is a bearish reversal pattern that occurs during an uptrend. So that means that when you see such a pattern being created and there's an uptrend, that means that the market wants to go down. So in that instance, what do you do to your trade? You put it at one shot or you close it if you know you have made so much profits. The mistake a lot of people make is when the market is up, they put the trade on cycle and it continuously makes profit for them. They forget to go look at the longer term time frames. When you look at those time frame, you see if that coin is going to fall in value, and that way you just go put it on one shot, or you typically close your trade. Why? So that you have enough money to do other things. Yet again, keep an eye on the longer time frame. So if on the longer time frame it shows you that the pattern is about to reverse and the coin is about to increase again, you go back, buy that coin and put it on cycle. That's it. Sorry, is everyone seeing my screen? If you are not seeing my screen, type 2. But if you are seeing my screen, type 1. If you are not seeing my screen, type 2. But if you are seeing my screen, type 1. Okay, so Mr. Man, yours is the one that got problem. Cyril, maybe you can log out and log in again. Okay, so let's finish this and then we go to the test, which is the important part. The three inside down candlestick pattern is a bearish reversal pattern that occurs during an uptrend. It suggests a potential trend reversal and is characterized by three consecutive candlesticks. The pattern signifies a shift in sentiment from bullish to bearish and often provides traders with a signal to enter short positions or close out long positions. Exactly what I said, right? What does the pattern look like? The first candlestick is a long bullish candlestick that reflects the existing uptrend. The second candlestick is a smaller bearish candlestick that trades within the real body of the first candlestick. The candlestick is also referred as the inside candlestick. The third candlestick is a long bearish candlestick that closes below the low of the first candlestick. This candlestick engulfs both the first and the second candlestick, hence the term inside down. Remember that second candlestick is called inside, and this third candlestick is the inside down. It means the inside that they go down. The see, pattern psychology. The three inside down pattern reveals a shift in market sentiment. The first candlestick represents the dominance of the bullish traders, indicating a strong uptrend. However, the second candlestick signals a pause or consolidation in the upward movement. It reflects uncertainty in the market and a potential weakening of bullish momentum. The third candlestick is where the pattern gains its bearish significance. It represents a sudden surge in selling pressure as bearish traders take control. The strong bearish candlestick closing below the low of the first candlestick confirms the reversal and suggests a potential trend change. The psychology behind the pattern lies in the reversal of sentiment from bullishness to bearishness. As the second candle forms, it creates uncertainty among traders who were previously bullish. Some buyers may start to doubt their positions or consider taking profits. This indecision, combined with the increasing selling pressure from the third candlestick, prompts bearish traders to enter the market, leading to a potential reversal. Overall, the three inside down pattern indicates a bearish shift in sentiment after an uptrend. It serves as a reliable signal for traders to consider short positions or the closure of existing long positions, suggesting that the price may continue to decline in the near future. However, like any pattern, it is crucial to confirm the signal with other technical analysis tools and indicators before making trading decisions. So here's an example of the three inside down. This is how three inside down looks like. So do you know that if you understand these bearish patterns, it's easy for you to take decisions or take better informed decisions, even by using indicators or not. I remember in one of the teachings that Prof said that with the way the market is right now, he uses much more of trend lines and candlestick patterns in his analysis and a little more of indicators here and there. You get me? So every trader has the way they trade, and then it opens you to see how the market works. So you can see the example of a three inside up on my screen. You see a long, huge candle. You see a red candle, which is the inside candle, and then the third candle is the inside down. That's to show you that the market begins to fall. 1, 2, 3, 4, 5, 6. Okay. So I hope we understand this. So we now go to the important part of the thing, which is the bullish patterns test. We're all going to take a test now. Are you all ready to take a test? If you're ready, type a yes. If you're not ready, say no. And after they say no, just delete yourself from the group. Just remove yourself from the chat if you say no. Because I think it's the most important part when you test your knowledge from what you have learned. So if you want us to take the test, type a yes. If you want us to call it a day, let's type no so you can go and do it yourself. Okay, the yes have it. I'm clicking on bullish pattern test now. Let's go. It's just 10 questions. Question 1. What is the most ideal length of a lower shadow of a hammer? 1. Half of the length of the real body. 2. 2 times longer than the real body. 3. 1.5 times longer than the real body. And the last one, 1 time longer than the real body. So let's see the smartest person in the house. Write it out on the chart. What you think the answer is? I know the answer, but I don't want to just talk. Mass with I not do to know. Let me see. Some people are following up. I'm impressed. I'm impressed. For real. So it should be 2 times longer than the real body, Abby. I'm gonna click it now. Correct. We got it. Good. Number 2. The color of the candles in 3 white soldiers is not important. Let's say the color of the candle, not the important. Not true. I've been a lie. Not true. I've been a lie. The color of the candles in 3 white soldiers is not important. So can these 3 white soldiers be red too? That's what they're trying to say. Are they still called 3 white soldiers when they are red or 3 black soldiers? So the color of the candles in 3 white soldiers is not important. True or false? When I say false, so I say the color of the candles in 3 white soldier. Say it's not that important. Is it true? Say the color of the candles. It's true. It's true. Because this same thing can be red though. But make a pick when I want to write false, false, false. Hey, yeah. You got it too. It's false. So, so learn it too. The 3 white soldiers are always green candles. The 3 black soldiers are black candles. Or red. Okay, 3 black soldiers are red candles. So clap for yourself. All of you who said false. Ibrahim, you don't fail. Oh. Sure you know. You will repeat class. Okay. It has a long upper shadow with a tiny real body. When it appears with a confirmation, the price is likely to fall. It is called what? Oh, yeah. Oh. It has a long upper shadow. Long upper shadow with a tiny real body. When it appears with a confirmation, the price is likely to fall. It is called what? Abikaye, you say Nahama. Long upper shadow with a tiny real body. When it appears with a confirmation, the price is likely to fall. John, you say hammer. Michael Lele, you say hammer. Now when I say hammer, if we fail the thing will bring us back to square one. All right. You see? You see now? You see now it's wrong. It's wrong, oh. What is the color of the real body of a hammer? What is the color of the real body of a hammer? Another question. What is the color of a real body of a hammer? Daisy, you say green. Okay. Oh. Everybody, they say green. A hammer could be red or green. Oh. Let me not take people's word. Let me take my word now so that if I fail, when I feel laugh. My answer is red or green. All of you are saying green. Wamrena, Michiana, I hope you learned that. A hammer could be red or green, ladies and gentlemen. It doesn't need to be green. Guys, if I country, now you don't rush red or green. You try well. After I don't answer and correct. So please note that a hammer could be red or green. What pattern is this? Liberty. What pattern is this? Inverted hammer pattern? Shooting star pattern? Or this isn't a pattern? Oh, yeah, oh, I'm waiting for your answer. So, no, don't type C. There's nothing like C as you. Write it out. Sure, hand the pen you. Write it out. I'm waiting for your answer. So, now don't think too much. Inverted hammer pattern. Inverted hammer pattern. Mm-hmm. I dey see 3 white soldiers. I've been at 3 black soldiers. And then I see something that is formed there that shows the reversal. Eh? Fine country. You say na sitting star. You cool. I beg you. I never sitting star before. I've been a standing star. You were right, Oga. Oh, beg. Atobatele Yusuf, you said this isn't a pattern. What am I going to choose now, ladies and gentlemen? You say shooting star pattern. It's inverted hammer pattern. That's what I think is the correct one. Let's note this, so that even if we fail, it will come back. Why not they play with me now? Why not they play with me? Why are you guys playing with me? Sure, don't play. You learn the hard way if you play with me. Okay, I hope you learned that. As an inverted pattern. So what is this and what does it show? Hammer, strong buying pressure. Evening star, strong buying pressure. Shooting star, strong selling pressure. Morning star, strong buying pressure. Yep. Inky says morning star, strong buying pressure. Okay. UP, morning star. Emmanuel John, morning star. Okay. I need two more. Gilles, morning star. Dr. Hope, say morning star. Okay. I'm going to choose morning star now. Correct. You can clap for yourself, ladies and gentlemen. Oh, that feels good, yeah? Now you can read, listen, and understand. And Michael, time don't pass. You own a morning star. People own a morning star. True. What does this pattern represent? Okay. This pattern indicates a potential reversal from bullish to a bearish trend. This pattern indicates a potential reversal from a bearish to a bullish trend. This pattern indicates the market is going to continue the bullish trend. Which is the answer, ladies and gentlemen? Zeal, waiting. Read this thing where. The answer is read between the lines. See, I don't even need to think. I know that number C is not correct. It's not correct, ladies and gentlemen. UP, you say 2. I don't know what it be 2. Find country, write A. I don't see any answer as A here. You all write it out. Write it out. When you write it out, most times you never forget these things when you write it out. I'm waiting for the answer. What is B, UP? What will be B? Please write it out in full terms. Come on now. What does this pattern represent? A, this pattern indicates a potential reversal from a bullish to a bearish trend. B, this pattern indicates a potential reversal from a bearish to a bullish trend. This pattern indicates the market is going to continue the bullish trend. Well, the answer is this pattern indicates a potential reversal from a bearish to a bullish trend. It is a potential reversal. It is not a definite reversal. Why? Let's ask ourselves why. Most whether some people they follow up. It is a potential reversal. It's not a concluded reversal. Why? Why is it a potential reversal? Because you must need to wait for a confirmation, ladies and gentlemen. It has the potential, but not until you see a confirmation, it is not complete. Thank you very much, Grace Gold and Yebasi. Too much. Correct. Number 8. What does the morning star pattern look like? What does the morning star pattern look like? It is composed of a small bearish candle, a large bullish candle, and a small bullish candlestick in order. Number 2, it is composed of a large bearish candle, small bullish candle, and a large bullish candlestick in this order. Oh yeah, I hope you guys are reading it. It is composed of a small bearish candlestick and a large bullish candlestick. So what's the answer? Please, when you are writing it in the right parlance, in the right English. But when you say A, C, B, you can forget it tomorrow. But when you write it in full, in fact, when you are writing it, you know if you are correct or not. So I don't understand all this large, small, large beer, small boo, large boo. Sure. What is hard to write it in full terms? What does the morning star pattern look like? It is composed of a small bearish candlestick, a large bullish candlestick, and a small bullish candlestick. Number 2 says it is composed of a large bearish candlestick, a small bullish candlestick, and a large bullish candlestick in this order. Number 3 says it is composed of a small bearish candlestick and a large bullish candlestick. UP, if you write B or A again, I'll just put you for waiting room. Large bearish candlestick, small bullish candlestick, and a large bearish candlestick. Correct. Large bearish candlestick. Grace Gold, Daniel Bassi, you are correct. David, you are correct. Yeah, large bearish candlestick. Okay, so number 9, we're almost done. Just 2 more questions. What does this pattern represent? This pattern indicates the market is going to continue the bullish trend. This pattern indicates a potential reversal from a bearish to a bullish trend. This pattern indicates a potential reversal from a bullish to a bearish trend. What's the answer, ladies and gentlemen? Potential reversal from a bearish to a bullish trend in key. Okay, let's see 2 more people before we take the choice. Inky is saying we choose. This pattern indicates a potential reversal from a bearish to a bullish trend. That is number 2. Any more? Reversal from bearish to bullish. Yes. I mean, it goes without saying now. Come on. When you see red candle, you see green candle. You can see another big green candle. Now, bearish to bullish now. Correct. We got it right. Choose the most correct statement. The 3 white soldier pattern suggests a strong change in market sentiment. The 3 white soldier pattern shows a strong change in market volume. What's the answer? Is it sentiment or volume? Is it sentiment or volume? The 3 white soldiers pattern suggests a strong change in market sentiments. Sentimenty. Right, correct. So you see, we got 90% because of Pastor I.B. Kaye. When go lead us to the wilderness, lead us to desert, not lead us to where we see milk and honey. Pastor, try again. Okay, so before we go, I think we've had a very good time with this meeting today. If you have had value, if you have learned something today, just type 1. But if you not learn anything, just type 2. Or if you not learn anything, not just type at all. Let me see the 47 people, those who have actually learned something. If you have learned something, type 1. But if you not learn anything, not type at all. Or type 2. Value overdose or I beg. Okay, that's good. Well, before we go, let's train our eyes with some of this graph. Now, you all know how we do this. This graph is to help you know or learn more about your candlestick, because each of these graphs show different patterns that you can take into consideration to know if it's going to go up or down. Now, as you can see on the screen, if you say down and I click down, if it's not going, it's going to beep. But if it's the right one, it's going to tell us if it's correct. And remember, when you are using candlestick formations to analyze the market, you look at the last 3 or 4 candles. So, which way is this graph going? Zeal, you don't rush, you say up now, you don't rush. Because you see one green candle for the last one. They look well. Who's next? Fine Country, say up. Ibrahim, you say up. Michael Lele, you say up. The first 5 people, 4 people say up. Okay, I choose up. Yes, it went up. They were correct. Clap for yourselves, Grace Gold. Clap for yourself, Carol. Clap for yourself, Yusuf. Clap for yourself, Ibrahim Husman. Yes, you all were correct. Next pattern. Like British people, next pattern. Now that's if the ERO come out, now pattern. So, with this next pattern, which way is the graph going? Up or down? Akintayo say down. Abikayo say down. IB, are you trying down? Ibrahim said down. See why I said down. Why are you all saying down though? Why? Because you see the one red candle for the last part. Okay, when I said down, I choose down. Yes, it did went down. Congratulations, y'all. I see you guys are picking up. Zeal. You have to use that your Z word to read more. You got to read more. But you're trying. I'll give you that. You're trying. Next pattern. We're going to do this for 3 more minutes and call it a day. Which way is the graph going, up or down? Remember, look at the last 3 or 4 candles. See if it forms a pattern that tells you if it's going to be bullish or bearish. So you say the answer is up, eh? David, you say up. Ransford, you said up. You're saying up. Everyone's saying up. Okay. I hit the up button. And yes, it did go up. Next pattern. The last one for today. So which way is the graph going? This one. Which graph is the graph going? Up, up, up. Ah, when I go, Sabi take 1% to all these people. Take profit 1%. Okay. And yes, it went up. I am glad to see that we all really followed up with the teaching today. I myself actually even learned a lot too. Ron, I appreciate you all for being on the call. I want to. Yes, I want to thank you all for being on the call. We actually spent 1 hour, 30 minutes. It's awesome. It's really good. So I hope we've learned quite a lot. I want to thank you all once again for being here. There's no me without you. We learn every day with all this. Thank God we had the call recorded in time. I'm going to share it with the group afterwards. And then remember that on Sunday, we have our prospect meeting. Listen, that last Sunday was not possible because of many things, but this Sunday is going to be real. It's going to be awesome. Please, for your own good, learn to create residual income. I've spoken with Dr. Money. I think I want to add one more session to all my weekly sessions. So I do Tuesday members training, which we're doing now. And then I want to add a Thursday or a Friday. And that's going to be a midnight. That's going to be like 10 p.m. because I want to change some people's life. You know, every Friday night, people they go drink, people they go do nonsense, spend money anyhow. That Friday night is when I want to start doing my network marketing series. It's going to be purely network marketing. You're going to learn a lot of ways on how you can make anybody join your team and become your team members. If you think you like that training, if you think it's going to make sense, just type 1. I'm still thinking of it if it's going to go. But if you don't think you need network marketing, type 2. If you want to learn, if you like to learn, type 1. Let me see. 1, 2, 3. I'm counting. 4, 5, 6, 7. I want to see somebody type 2 just now, whether I'm a mistake. The 2 just vanish anyhow. Okay, Abikaye, you type 2 once, 1, 1, 1, 1, go type 2. All right, so I think it's going to be a good class. So maybe I'm going to start that class this week, Friday. This week, Friday, maybe I'm going to start the class. Maybe it could be from 10 o'clock. It's going to be from 10 o'clock because I want all of us to win. Passive income is the way. Yes, I love trading, but that passive income, Don't underrate. I'm sure when you come for that class, you will know. So I'm going to give you feedback tomorrow on if we're going to have that class beginning from this week or next week. But please, if you want to be serious with your business, come and join that class. IBKA, please, I'm asking you to unmute yourself. How are you doing, sir? How did you enjoy the class? What did you learn? Fine country, my class is starting from 10 o'clock. Okay, it's 9 o'clock, it's too late. I'm starting from 10. I know why. It's purposeful. It's on purpose, not 9. It's starting 10. Because, bro, if you are serious about learning anything, whether it's 12 midnight, you put an alarm and learn it. So I'm not doing it in convenience for anyone. If there's only 3 or 4 people, in fact, I want only my team members to be there. So even if you come, sir, it's a plus for you. Because when you put those things to practice and you begin to get much more team members and earn more, it's not going to be to my benefit. It's your benefit. Mm-hmm. So, brother IBKA, how are you doing, sir? I hope you enjoyed the class. What did you learn?
Oh, LawyerTAJ, thank you so much. I really enjoyed the class. In fact, there was no dull moments at all. No dull moments. Okay, so yeah, I did, and then the candlestick patterns and all that became more clear. And then yeah, this app, I'm going to download it right after now, and then I'm going to jump right into it. So learning is the way to go in this business. Learning is the way to go. So I did have so much value for every time. Thank you so much. Appreciate. Thank you.
Thank you very much, my brother. And to everyone in this call, you guys are wonderful. You're the reason why we do this, because learning is a continuous process. And eventually, when you learn more, you earn more. So, like we always do, please unmute yourself, say your goodbyes, and God bless yous. And see you on Sunday.
Goodbye, everyone.
All
Everyone.
right, goodbye,
Thank you.
everyone.
Goodbye, everyone. Good
God
night.
bless
Thank you,
you.
Lord. I appreciate
LawyerTAJ,
today's
thank you
my
very
best day.
much, as
Thank
always.
you.
Oh,
God
today's
bless
your first day,
you.
God
Carol
bless
Steph.
you.
Oh, thank you. You're
No, not
welcome.
my first though, but my best Zoom.
Oh, your best Zoom. Oh, God, I beg.
Yes.
You send me like 10K quick. Man, take one bottle.
God bless you.
All right, my people. God bless you all. See y'all
Thank
later.
you,
Thank
Lord.
you.
Bye
For
All right.
now.
Okay, bye.